Hello and welcome to this weekly Outlook video at xm.com. I'm Maria Pachardis, and joining me is investment analyst Marios Hadjikyriacos. We'll be reviewing the week ahead. So Marios, let's begin with Germany. Preliminary GDP data for the third quarter are due out on Thursday. Given that Germany's economy contracted in the second quarter, another negative number would constitute a technical recession. How likely is this, and what will it mean for the euro area?
But unfortunately, it's quite likely. The German PMIs were very weak throughout the quarter, so we are most probably going to get another slightly negative number. Now, that would probably spell bad news for the euro. I think it's going to be a most unpleasant week for the euro, let's say, because no matter how you slice it, if headlines start saying that your biggest economy is in recession, the sentiment turns around quite quickly. Now, having said that, I also think that there are good news here. I literally think that paradoxically, a small German recession may be exactly what the euro area needs right now. And the argument is this: for the euro area to recover, it needs fiscal stimulus. But the only nation that has any real fiscal space to spend is Germany, and German politicians have been very clear they will only start spending after a recession hits. So this could finally be what pushes German politicians into action, and if that happens, that would argue for an eventual recovery in the euro area. So I think that the near-term risks surrounding the euro are tilted to the downside, and for that to change, we would need to see an announcement for a substantial fiscal stimulus package out of Berlin.
I see. Turning now to the Reserve Bank of New Zealand. It will announce its decision early on Wednesday. What are the chances that policymakers will cut rates, and how might that affect the Kiwi?
Well, the current market probability is 65%. Now, I think it's more of a coin toss than the market pricing would lead one to believe. And we've had some encouraging developments on the margin lately. So the US-China trade ceasefire, but domestically as well, we've had some slightly stronger than expected data out of New Zealand, at least relative to the RBNZ's own forecasts. So I think that the rate cut will depend on a data point that comes out one day before the policy meeting. The RBNZ will release its quarterly survey of inflation expectations. This is perhaps the most important indicator that comes out of New Zealand. The last two times that this number dropped, the Reserve Bank reacted with aggressive rate cuts. So if we do see this number drop, then that would argue for a rate cut. I think that would seal the deal, let's say, and the Kiwi could therefore plunge. Now, if we see that number hold more or less steady, though, I think that would argue for the RBNZ to hold its fire for now. Now, a final point here is that since a rate cut is already priced in by 65%, if they do cut, then the negative reaction in the Kiwi will probably be smaller than the corresponding upside reaction if they don't cut.
Right, I see. Moving on to the US. We'll get CPI inflation data out on Wednesday, in addition to hearing a testimony from Fed Chairman Powell. We'll also get retail sales data out on Friday. What are we likely to see there, and how do you see all this affecting the dollar?
Well, I think that the data are more important than Powell's testimony. And the Fed has been really clear about what it wants to do lately. We've cut rates 3 times, we want to take a step back, monitor the economy, and if there's a need for it, we'll act again, but we don't see any real threat right now or any real need for action. So I don't think Powell will deviate very much from that, nor can he really, because nothing substantial has happened lately. So I think that the dollar's forthcoming direction will depend mostly on the data, especially on the US retail sales, because consumption has really been holding up the US economy in recent quarters. So as far as the dollar is concerned, I would say that the near-term outlook is positive, especially relative to the euro. If you just look at the economies, the euro area might enter a recession very soon, whereas the US has slowed down, but it's still in a much better spot than Europe, for example. So in that sense, I think that the near-term risks surrounding euro-dollar are tilted to the downside.
And finally, is there anything else we should look out for?
There's a flood of data throughout the week, mainly from the UK. We will get literally every important indicator from Monday to Thursday, but as usual, the pound will only react to politics. Everything is about the election right now, and in this sense, I think that the most important variable for the pound right now are incoming election polls. Now, moving away from the UK, in China, we'll have the monthly data there as well. Retail sales, industrial production, fixed asset investment. This could be important for market sentiment in general, and the one, but definitely a more important variable will be what happens in the trade war. And finally, we'll also get labor market data out of Australia, as well as third quarter GDP data out of Japan.
Marius, thanks so much for joining me, and thanks for watching at XM.com.